It's not the first time this has happened, and it won't be the last time it happens either. But fundamentally, I don't think your strategy changes in a situation like this, right? Is you should have a portfolio that isn't all in on growth stocks. Like, we've mentioned already miners. You've mentioned gold. We talked just now about growth opportunities. You've talked about a whole bunch of really wealthy people with their feet wrapped in newspaper that are still looking for opportunities. And so you've got to have a segment of your portfolio where you are constantly on the hunt for opportunities when they arise. When a really long-term stock that's a pillar of industry is at crazy valuations because the market's oversold, you kind of got to be ready to move on that sort of thing. And 2020 provided an opportunity for that, and arguably now provides an opportunity for that.
G'day, Shay Russell here from Exponential Investor Podcast, and we are going to consider this your Christmas episode. Sam Volkering, thank you for joining me for the first time in 3 weeks. I really appreciate it. But I want everybody to see this fabulous jumper that you are wearing right now. I am full of Christmas joy, but this is going to be the best thing I have seen in a long time. For everyone who is listening to audio only, Sam is wearing the geekiest and coolest elf jumper I have ever seen.
Oh, geekiest? It's a bit rough.
But I said coolest.
I mean, I did get it. I got it from a shop that was called Geeks for something. It's a gaming, and anyway, they sell Christmas jumpers. They got everything from Star Wars Christmas jumpers to Mario Christmas jumpers, and clearly Elf. So anybody that loves the Elf movie, which, I mean, who doesn't love Elf?
Well, actually,
don't tell me.
So it turns out a dear friend of mine found out that Elf is the Christmas movie in his wife's house, and he admitted at a dinner that he'd never seen it. And apparently there were gasps all around the table that nobody had seen Elf. And I said, I've got my audible gasp. Yeah. I said that I've got a 10 and 11-year-old and they watch Elf every year as Christmas comes up now. And I'm like, meh, not missing much. It's all right.
I'm glad we are on other sides of the world right now.
I'm glad that everybody else can join us and listen to this riveting content, investment content that we're bringing them right now. Yeah. But I do actually.
Well, I mean, there's something. There may be something in that, because I mean, isn't it the way to make money these days is to either release a Christmas movie that gets streamed every year now, or a Christmas song. If you're a musical artist, same thing, and you haven't released a Christmas song, are you really doing yourself justice?
I completely agree, because it's this time, November every year, that obscure artists put out more obscure Christmas albums, all hoping to do a Mariah Carey and write another banger like All I Want for Christmas Is You. And I think every year that song makes Mariah Carey something like $72 million in royalties. So it's some crazy number.
In the UK, there's some guys, I can't remember who it was. I'm sure the British listeners will know, and it makes them, a few £100,000 every year just because it gets played on the radio and streamed so much, because it's just an iconic Christmas song. But anyway, we're not really here to talk about. None of us are musicians. So,
no, but look, hey, there are ways to invest in music. I mean, you've got to remember David Bowie was the first person who introduced the ability to sell basically his royalties forward into the future. All right. You know what? We're going to try and turn this podcast around and see if we can both ourselves find the point. Now, first of all, I want to kickstart with an investor lunch that I was lucky enough to attend to. I was lucky enough to attend a high net worth investor lunch for a very small, teeny tiny exploration stock listed in Australia, not operating in Australia. Can't reveal the name because compliance would not like that. It's a tiny, tiny stock and compliance would be mad. However, it wasn't so much the company that I was impressed with. I know the company quite well. I'm friends with some people on the board, but it was the people in the room that I found most interesting. They're a very small, high net worth group of individuals, and all of them were very unassuming characters. And I love that. It's one of my favorite things when you find out the person you're sitting next to is a billionaire and, they've wrapped their feet in newspaper rather than own socks. I love that sort of thing. True story. We'll dive into that one another day. But one thing they were all talking about, now they weren't dedicated resources investors. They were opportunists when it came to the stock market. There were people there who had stocks, retail stocks, banking stocks, everything you could think of. They're sprinkled all over the place, and they also invest internationally as well. But they all said the same thing, and that is, what a shit year it's been in the market. None of them were optimistic. None of them. Now, they all made it very clear, we'll give it another red hot go in 2023. But they were all convinced that everything had gone badly this year. Now, my question is, Sam, I'm too optimistic for my own good. I'm such a no. There's always a silver lining to everything. And look, I'm saying this is a lot of my stocks in my personal portfolio are down as well. But I don't think this, just because it's been a down year, means it's been an overall bad year. Am I wrong?
Because it's been a down year, it's been a bad year. Well, it hasn't. Depends on who you are. It hasn't been a bad year.
You're talking about crypto by any chance?
It hasn't been a bad year. It hasn't been a across the board down year either. So again, we love people in general love to play in generalizations. As I make a generalization. Because people talk about the market. We always talk about the market. It's because if we spoke about anything too specific, we would be here for a very, very, very long time. So we sort of bundle it all together and talk about it in general. But you know as well as I do, there are a bunch of stocks that have done okay this year. I mean, like I was just reading a report the other day that the London Stock Exchange Group is up for the year. And they just got a nice, tasty little investment of $1 billion or so from Microsoft. So, you look at something like that and you go, well, actually, if you'd have held London Stock Exchange Group stock, not a bad year at all. It's a pretty good year. If you've held, some of the big mining companies, BHP, Fortescue, Rio, I think, I'm not sure.
With coal. Anything with coal in their arsenal has done quite well this year.
And a lot of these are dividend paying as well. So you chuck in a 10, 12, 15% dividend, which a lot of them have sort of been paying out around. It's not been that bad a year. So I think it just depends on your perspective and where you're looking in the market and what you're looking at.
I completely agree with you. I actually wrote an article a couple of weeks ago, might be longer than that. Time tends to fly in December for some of us. That the London Stock Exchange overall, the FTSE 100, is one of the best performing indices around the world. It's beaten every developed market you can imagine. And it's largely to do with its large, stable resource companies that are paying a dividend. So if you've been invested in any of them,
Can I just add to that? If you'd have read the British media about the markets this year, that would sound so far from the truth.
It does, doesn't it? Do you know the other thing too is if you'd bought gold in pounds at the start of the year, you're actually up 8% because the pound's weakened so much against other currencies. Your pounds are worth more if they'd been converted into gold, which people seem to be forgetting. This is why when it's like just because it's a down year doesn't mean it's a bad year. There have been some great investable opportunities. Now, I'm a frequent gold buyer. I think in Aussie dollars, gold's actually been quite flat overall. But, if you're a frequent gold buyer, you've actually probably done quite well, and you've probably done reasonably well in silver as well. So this pessimism in the market, I can't help but feel if it's just a little bit self-fulfilling at some point. Like, and if I'm in a room...
I love that phrase, self-fulfilling prophecy.
Us writers with our cliches that we like to lean on.
That's true though.
So I'm in a room full of people that are convinced, all of them are convinced it's been a down year. But that's not going to stop a single one of them from investing more next year. So it either means they're a sucker for punishment or perhaps everybody, when you're a stock picker, you're always a sucker for punishment. But so that means perhaps they've actually maybe done better than other people, but they haven't done better than they hoped. Or, everyone they just like throwing good money after bad.
Yeah, no one ever talks about the bad stuff though either. Everyone like, and until everyone's losing, and even when everyone's losing, no one ever really talks about the really big losers. But sometimes you do have
I know I can
stocks
tell you some big losers if you want.
that stink it up so bad. But look, I think fundamentally you just can't change your strategy, even when let's say the markets, and look, there is a lot of stocks that have just tumbled and sucked because of rising rates and inflation and issues with supply chains and this unwinding of from growth stocks and companies that have been poor cash flows and built valuations on cheap money. All those sorts of things are sort of unwound from the market, which is fine. It happens. It's not the first time this has happened, and it won't be the last time it happens either. But fundamentally, I don't think your strategy changes in a situation like this, right? Is you should have a portfolio that isn't all in on growth stocks. Like, we've mentioned already miners. You've mentioned gold. We talked just now about growth opportunities. You've talked about a whole bunch of really wealthy people with their feet wrapped in newspaper that are still looking for opportunities. And so you've got to have a segment of your portfolio where you are constantly on the hunt for opportunities when they arise. When a really long-term stock that's a pillar of industry is at crazy valuations because the market's oversold, you kind of got to be ready to move on that sort of thing. And 2020 provided an opportunity for that, and arguably now provides an opportunity for that. There's a lot of great companies, particularly in the US market, that have been punished, but are riding and that will survive the next. If we all end up in a global recession, the UK is going to be in a recession. The US is probably already in a recession too. I don't know Australia's fortunes, but they always seem to escape them. We've had this debate a few times.
Yeah, we have. Australia's
I'm sure we owe each other several cases of beer, or maybe I just owe you. Maybe it's just you that I owe. Actually, we should revisit that. I think we made a British recession.
Oh my God, we did. We've not done our homework, have we? We did.
No, we haven't.
We made a bet, I think, in one of my first podcasts when I came on board, was we revisited our 2018 or 19 bet. You did the homework. Thanks for letting me put my name on the group assignment. And then we didn't revisit that at all when the bet of when the UK would be in the recession.
I think I said the UK would be in recession now.
I think you did. Did we just
Q4,
net out the case of B?
Which is right, I might add, which is right.
Well, you're formally in a recession. It was declared at the end of last quarter.
Yeah. Anyway,
let's get back to the point of our story.
We'll come back to everybody with that one.
Yeah, there might be cases of beer or cases of Canadian Club and Dry crossing. I'd love to confidently name the ocean off the top of my head, but it eludes me at this point.
I would say so, except if Royal Mail wasn't on strike, hence like nothing's getting delivered for like the next 2 weeks.
Just before Christmas. Oh, well, if it makes you feel better, the wharfies in Melbourne have gone on strike as well. Every year it happens without fail. They refuse to unload shipping containers. It's like you can set your parcel buying watch to it.
So Royal Mail's on strike here. So posties are on strike. Nurses are on strike. The rail is on strike. What else is on strike? Ambulances are on strike. This entire country is currently on strike. Wow. And with the snow, if the gritters go on strike, then we are all screwed.
All right. So it's snowing. Everybody's on strike. Nobody's working except you in that fabulous jumper.
It's snowing. No one can go anywhere. It's too icy. No one has winter tires on their cars. Nothing's getting delivered.
Can't have a heart attack.
Can't go anywhere. It's a winter lockdown without having one imposed. This is they're calling it, and of course it's not been a bad year. As I said, it depends on who you are. Hey, according to my son, it's a great winter because there's I can see 6 snow angels in my backyard.
Oh, it's amazing. Well,
anyway, we were talking about something, and then I got distracted.
Oh, do you know what?
Which I promise.
Yeah, we're talking about the UK recession, and sounds like the deepening civil unrest as we speak. Wow. I love it. But I have a
but
I have a theory.
Don't. Yeah. Your theory is probably the same as my theory.
Well, let's find out, shall we? I have a theory. If you've had such a bad year in the markets, why wouldn't you adjust your method going into the new year?
Because I see, for me, I think what we are in the midst of is, I don't want to call it an anomaly, but if you look at the overall long-term trend of how markets behave, it's an anomaly. it's not a black swan event,
No,
but it is certainly it's an outlier, right? It's an outlier. I think that fundamentally you have a smart, diversified portfolio. You have a mix of stocks, some that are, as I said, pillars of industry that are machines at generating cash, pay dividends. Have a section for your high growth punt plays. Sometimes they come off, sometimes they don't. But now's a great time to be hunting for them, because if you're a company that has a runway that can sustain a recession, that's where we were going with this. If you've got a cash flow that can sustain a recession for 12 months, 18 months, and it might be that long, which is fine. It's not a huge period of time, really. Then and come out the other side of that and still have a fundamentally good business strategy, then you'll set yourself up pretty nicely for when it's a sunnier day, at least in the public's perception. But when things are moving forward again.
Yeah, look, I agree. I think nobody likes losing money, and I dedicated a podcast to my own tale of losing like $100,000. It was awful story to tell. But the best thing that can happen is anything that forces you to understand the markets better. And as long as you don't use a down year as a reason to move away from investing, but rather to strengthen and sort of not redefine, there's a word I'm looking for and I cannot think of it off the top of my head, but basically stress test your portfolio, as you said, a diversified portfolio that isn't just stocks, by the way. It also means delving into alternative assets like crypto. Are we still allowed to call crypto that? Or has it got a real name now?
Yeah.
It's not alternative assets?
Crypto, digital assets.
Digital assets, cool.
People call it lots of different
Just checking,
stuff.
I'm not hip with what the kids say these days. So I need somebody. I was going to say younger.
The boomers call it rat poison. No, I'm just kidding. Not everyone says that.
God.
It is, but it's the same. It's the same premise. It's the same premise. Fundamentally, there are some issues with some organizations or opportunities, and for many others, there are not. There are no issues, and things are as good as they've ever been, and yet values are at prices that general sentiment just determines to be what it is. But fundamentally, I think is puts a lot of these things undervalued. So for me, it's a pretty cool market to just be, again, and I don't think you need to rush this either, right? This isn't like, it's not going to flick a switch and then tomorrow everything's going to just be happy days again. The Fed, Bank of England, the RBA, they're all increasing rates still. Do you know what's funny is when I hear this thing, it's like, oh, they're dovish. Oh, I don't even know what the terms mean. But it's like they're not going to increase rates as fast as they have. It's like, hang on a second. They are still increasing rates. They're just not increasing them at big chunks anymore.
Yeah.
It's like, did anybody miss that? Or is it just me?
Pivot analogy that I've been seeing.
Yeah,
the Fed will pivot,
ridiculous.
but it doesn't pivot. It just keeps
and look,
going up.
And we've said for a long time, we've said
now.
rates have got to keep going up to nuke inflation.
Well, it won't actually get rid of all the inflation, because it's like there's a good chunk of it supply chain driven.
Yeah, absolutely. Anyway, point is, don't give up on the markets,
mate.
It might be cold outside, but it's sunny still.
Sunny inside. All right, Sam, I have no idea how long this podcast has gone on for, and I appreciate anybody who is still here on this journey. In fact, if you are still here in this journey, feel free to comment the time you watched till in the box below. I would love to know if you made it this far. Now, to sum up for 2022, I'm thinking I want to look at brighter days ahead. Tell me, what is on your radar for 2023?
Same stuff. I must sound so boring to people
Wow.
sometimes.
At least your
Just
jump
like
is interesting.
I keep getting excited about the technologies that are driving industry and driving change. People always are so scared of change, like, oh, it'll never happen. The robots will take over, and but it's like, decentralization, so crypto assets and DeFi. It's a huge thing that is just game changing. Whether people want to believe me or not, at this point, it's just like up to you. I still love the resources and mining sector. I'm so tired of just telling people it's not a Ponzi scheme. The resources and mining sector, I still love. I love the companies in that. We every time we build stuff and make stuff, we've got to do that by using raw materials. So those companies just inherently just make sense. Big technologies like quantum computing. There's no doubt that the electric cars and that is going to be a sort of way of life. So, infrastructure and things around that. There's so many interesting, fascinating things. Fusion energy. There's a great breakthrough this week in terms of that. That's still probably a number of years away, but there will be opportunities leading into that. It's not like you get into those when it's available. You get into that leading up to the idea. The regulation and legalization of cannabis markets. There's a whole bunch of really cool, exciting stuff happening in biotech and medical technology as well. There's just there's so many fascinating, interesting, wonderful things happening in our world that you can get pessimistic about everything that's going on, or you can just take a bit of time, have a look around, do some research, and see all the wonderful stuff that's out there too.
I completely agree. Actually, markets have been rough this year in places, but I think I'm not going to say there's brighter days ahead, but there is still opportunities ahead because stock markets have been operating for hundreds of years. It's just right now they operate in a more sophisticated manner than they ever have before. They're more volatile than we're used to because there's more participants, and a lot of that is algorithm trading. I was going to go for a fancier word then, but again, I lost it as it was coming out. I agree that commodities are going to have a banger of a year in the second half of next year. I'd hope for the first half. But there's policies coming in left, right, and centre from governments that are amplifying what's happening. I talked about metallurgical coal just recently and how they're desperately needed to make wind turbines. No metallurgical coal, no steel, no wind turbines. So the UK won't reach their renewable energy targets without met coal. Uncomfortable but true. Manganese is one that I think if you want to get super specific, pop that on your list. There are not many pure manganese plays globally, but it is looking to be a possible replacement for lithium because it can produce the same amount of power in lithium-ion batteries without increasing the overall cost. It does need to be bigger, but it does, it could be a suitable replacement for lithium, which I think is terribly, terribly exciting. And I am unbelievably excited for the role automation is going to play in mining and the efficiencies it will bring the sector, and the shareholders will reap the rewards of that through higher dividends. And, people not dying on a mine site.
That helps.
Yeah. So, like you, I'm optimistic for the future ahead.
Very good.
Now, tell me, Sam, after our stellar podcast today, how do we close this?
Merry Christmas, everyone. I think this is our last podcast before Christmas because I'm away on leave. I don't know what you're doing, Shay, for the break, but I don't think we'll have another podcast before Christmas. So, Merry Christmas, everyone. Put on your best Christmas jumpers, sink some mulled wine, open some presents, play in the snow if you're in the UK, and just have a good time.
And an absolute Merry Christmas from me. This is my favorite time of year, that unique 5-day gap between Christmas Day and New Year's Day when you have no idea what time it is, but you've got a fridge full of leftover food. All right, that's it for this year's final episode of Exponential Investor Podcast. It has been a wild ride, but it has also been a wild year, so what a fitting end to 2022. That's all for today. Thanks for watching. Bye for now.